products, and an award-winning broker. Now, back to the A1 Trading Show.
All right. Hey, Chris, how's it going, man?
Hey, Nick. Happy Wednesday, man.
Happy Wednesday. So semiconductors in the red this morning. Did you see anything? I was looking for any kind of update. Did you see anything on why that could be going on?
We have some breaking news here. Jim Cramer says NVIDIA's recent stock decline is a part of market broadening, not indication of a sell-off. Well, so if Jim Cramer's saying something about it, it's got to be wrong.
Okay. Yep. That's a concerning indicator. I thought that was interesting. So NVIDIA down 3.26%. I never thought I would say that because, it just seems like it goes up. That was my I said it as a joke on the trading battle, Chris.
Mhm.
I was like, I'm just going to buy NVIDIA because it literally never goes down. And sure enough, the next day it was up, 2.5%, and then continued to bleed higher there. So I don't know. I closed out of it though, so I wouldn't mind if it sold off for a little bit, give a little bit of breathing room to some of this rally, but we'll see what happens.
Yeah. Well, plus if you look at the weekly chart, NVIDIA hasn't had a losing week since January 8th. So,
And Chris,
we have
I would say this is just a
10 weeks
firing
in a
from the
row.
hip opinion, but
Mhm.
what are the odds that if you get a red week, what are the odds that you see another red week after that? I would say probably pretty high, but because you might get one of the last in, first out effect, like the LIFO effect, because all
Mhm.
these people who might have been chasing might also be the first ones to not actually be loyal to the stock and maybe sell
Very
some of
true.
it. I don't know. Do you think that's valid?
I think it's valid, and let's just talk technicals for a second. Even if we take this low from October of last year when the market ripped, we
Mhm.
had other than a little pause right here at the end of the year, beginning of this year, and then just right out of the gates, just like blast off for 8 to 10 weeks, like straight green. This is the
Yeah.
first real sign of a correction. So all I have is just a big fib, right? You take this low, you take this high, even if we had a shallow pullback at 23 and 30%, that's probably where, there's some eager buyers waiting. But yeah, if we finish this week with, holiday market closed on Friday, we have PCE on Friday. If that like rumbles into the markets and spreads its way into April as we kick off next week, I think we could settle into like a second bad week in Nvidia, come back to some of these pullback levels, and that's enough. And we know this market cap wise, you've got the second largest stock in the world market cap wise. It is enough to drag the entire Qs down with it. It's enough to drag the S&P down with it. Wouldn't be a surprise. So I frankly like to see it, and I'm positioned for it. If we have Nvidia dropping and the broader market goes with it, or the indexes rather go with it, then I think it's fine. But I think there's buyers waiting. It's probably this 30 to 38% level. Those are still pretty shallow pullbacks, but I do think it's interesting. Let's say we pull back 30 to 38% here, Nick. Do you think that we blast off the new highs? Because I don't. I feel like we're gonna have a reality check first, and then we're gonna see, like, is this market really able to justify new highs? Nvidia can never go down, and just the craze that we saw right out of the gates this year, where I think now the market's just settling into, okay, we've been off to a great start. Now there's going to be some sector rotation. There's going to be some, like, I hate to say it, but maybe Jim Cramer's right that there's going to be some Nvidia profits that are going into other instruments, maybe some other
Mhm.
sectors.
Yeah, and
So
I think also, you could point out too that, if we are really going to see rate cuts, I saw some guy, I can't remember which channel it was. I would give them credit, but I watched somebody who pointed out that did a study on rate cuts. Like when they actually start, the sectors that tend to lead for the following couple of months are actually value plays. So they like
sure.
financials, healthcare, some of the more value pockets of the market actually lead. So perhaps there is some of that. Like now, maybe the market really is like zoning in, like, okay, rate cuts are coming, that cat's out of the bag, which was so exciting for the market. That's kind of now like if that becomes kind of almost a known, like, okay, we're going to get rate cuts, then people might look at, well, maybe, if rate cuts are really going to come in and there is a bit of concern about, could there be some economic slowdown that's also triggering that? If that recession concern slowly creeps back in, the market still could do quite well, but perhaps there's a little bit of rotation as you're talking about into value areas, which is also, by the way, Chris, why I don't mind potentially looking at the Dow. It's kind of the boring of the
For sure.
three indices, but it's
Yep.
kind of why I've partially secularly been watching the Dow as well myself.
Yeah, and you can go Dow, you can go XLP, which is your
Mhm.
consumer staples. It's a lot more defensive makeup as well. If I go into this sector ETF, let's just take a look at the year to date, and if we're going to see, so if we're going to get really defensive, then we're going to see a flow into consumer staples and probably utilities, to be honest.
Mm.
And
Mhm.
utilities usually are underperforming. A student of mine reached out yesterday talking about these utility companies are reevaluating the use of electricity in grids because of AI, which I don't I don't think like a Consumer Energy or a Duke Energy or some of these huge companies that offer decent dividends, super low beta, they're not growth stocks, and I don't think that we're going to see a utility company talk about AI and all of a sudden have it be treated like it's a crazy growth company. So if we go into utilities for a second, here's some of the holdings that are big with the index weight. I mean, Next Era Energy, let's look at that stock, and Southern Company, look at that stock. Duke, I mean, so NEESO, just take a quick look at those, and let's see what's happening with the prices.
Yep.
So, I mean, we're
Yep.
at
And
$62, just a quick snapshot. I mean, we have a dividends, average volumes 13 million. It's like the shares are very tradable. You talk about a potential beat up sector. I mean, look, would I position myself for growth on Next Era? No, but I'd position myself for income. I mean, if I did something as far as like credit spreads, and I think
mhm.
Frank and I talked about this a little bit yesterday. But if I position myself for credit spreads, I mean, look, as long as we stay where we are or go higher, I can get paid on Next Era without having to own the stock. There's
Yep. I
ways to
like
do
that.
that. So I like the position
Yeah,
for
I
that. I
like that.
think
I mean, you could also pick if you like energy, if you're kind of like me thinking oil could continue to squeeze higher, you might look for a play on XLE, might look at,
yep,
there's you have some options there. So I generally think that it might be a little bit of a timing that is just as hard as timing a pullback, as like sector rotations are tricky. But
sure.
I do think that with history on your side, rate cuts could lean into some of the more value areas of the market. So worst case in that scenario would be you maybe just underperform growth if the market does just kind of stay the course at what it's currently doing. But I don't know. We'll see.
We will, and it's just if the market, if let's say the market mood and the sentiment just shifts so aggressively, where again we talked
Mhm.
about this yesterday. We don't see a big sell off necessarily. I don't see a big sell off necessarily. I see a little bit of cold water dumped on this hot rally. I do see a bit of a reality check, but man, I we could just go sideways, and so I think a big factor, and I think Nvidia is going to be a big factor because depending on how ugly this week's candle gets, possibly how ugly maybe 2 weeks in a row gets, that's going to be a big determinant on how the Nasdaq responds or how the S&P responds. But I think you're right. Like the Dow might be an easy one to play. The Dow might outperform the Nasdaq this year because it's just quality stocks with a little bit less volatility. And then I saw you pointed to the Russell earlier. I mean, the Russell is I think a really good opportunity to kind of play the catch up trade, but the problem is the Russell really needs to see that the Fed is in fact going to be pricing in like three rate cuts. Because if the market
Mm.
senses that the Fed is not going to do three cuts, and all of a sudden the Fed speakers are going back to maybe only one cut, maybe only two cuts, the Russell might still just struggle. I do see this as a clean breakout. So as long as we stay above, let's say 2015 or 2000, pretty clean structure on the Russell. I trade the IWM quite a bit. Same type of thing. We're sitting at 206. These are the levels that I'm watching. I've been looking for a catch up trade. I'm long out to January with some options, and my goal is, can we get back up to these highs? And if we just hang out, and actually have some rallies, like I'm positioned for it. So
Yeah.
I did really well in that 30% rally that we saw, and the Russell actually outperformed all the broad market indexes. But here we are lacking the follow through where SPY's at all time highs 20 plus times already this year. Q's at all time highs from the test of last week Thursday. The Dow's at all time highs, and the Russell's like, we're just right there. We're not at all time
Yep.
highs, and it's not even close.
It's an interesting market right now, Chris. I'm just looking at the three indices, and it's telling such an interesting story. Well, the four even really with the Russell thrown in there. The S&P
Mhm.
500. Well, let's do this. So tech is down on semis. At the same time, the Dow is actually doing quite well today. Well, comparatively speaking, it's outperforming today. So you're seeing more of the value areas that we're talking about doing well. You're seeing the tech and growth areas, well, specifically really semis doing poorly here today. And because the S&P is a dash of both, and actually kind of leaning tech heavy too now. You've got a flat day for the S&P. So it's like take your pick. It's a sectors day for sure. If you're in the right sectors right now, you're up today, and if you're in the dare I say it, wrong sectors because tech's been so massively outperforming.
Mhm.
But I think I think Boris. I keep coming back to this topic that he put on his he tweeted out recently.
Mhm.
He said maybe a play is to do a pairs trade on the indices, like short NAS, and he said long DAX, but I thought I heard him say long Dow, short NAS, and I thought that was an interesting play. Because if you kind of are in that camp, if you're not like strongly opinionated on which way the market goes, but you
Mhm.
think that there could be a sector rotation, a pairs trade could be really interesting where you again basically short NASDAQ, long Dow. So thought that was kind of interesting. What do you think about that? If you had to place that trade, which way would you go with it? Would you go the same way or go a different way?
I like that play because what caught my attention was looking at the Dow. If you look at the DIA from last year,
Mhm.
the daily and weekly chart. I mean, the Dow was keeping pace with the Nasdaq from that October low into this run. The Dow was one of the first indexes to breach the all-time highs. It breached it
Mhm.
before the S&P. It breached it before the Nasdaq.
Yep.
And that's what caught my attention. I was like, okay, so this is where like the dogs of the Dow conversation comes in. If there's going to be a contraction in growth and a contraction in tech, and it's higher for longer with interest rates. I mean, the fact of the matter is, AI has carried the Nasdaq this year again, and it's not really a broad market carry. It's a semiconductor carry. It's an AI carry. But the Dow is just good performance, and going back like 50 years, the Dow actually keeps pace with the S&P. So everyone thinks like the
Yep.
S&P is this great index and it's super broad market, but it's really not. When it's remember the Dow is also price weighted, not market cap weighted.
Mhm.
And some people argue like that's a terrible way to do it and that's archaic, but I kind of like it because it means that you can't be ridiculously concentrated. You have 30 companies that are equally weighted as far as price weighting. And I would rather take that over like last year we're carried by seven companies with the Mag 7 or the enormous 8 or whatever
Yep.
you want to call it now. They're saying, "Oh, now it's the enormous 2 or the Mag 2." It's like who cares? It's
Yep.
market cap weighted and it's all phony anyway. So I think the
Yeah.
Dow is a steady index to follow this year.
Check this out, Chris. So I just did
Yeah.
just a little bit experiment while you were pointing that out on my screen.
Okay.
I've got SPY/DIA. So I've just crossed the two of them.
Ah, nice, dude.
And so we can actually talk about what you just pointed out. So a lot of people, and this is a dangerous thing in markets, is the recency bias of thinking that the only thing that, it's an easy way to outperform is just go growth. But if you
Right.
actually truly look at it historically, yes, that's been the case if you go SPY versus DIA, and it's actually been even more aggressive if you went, Qs versus DIA, right? Right, the Nasdaq versus the Dow, then yeah, you can see like, oh, the S&P just leads the Dow. But as you mentioned, if you really kind of get longer term with it, yes, there are these big periods, but there's also these types of periods where the Dow actually greatly outperformed the
Yeah.
S&P 500. So to think, and that's not just during corrective periods. Sure,
Mhm.
it typically you can see here's like 2006 until 2012. That's like a 6-year period where the Dow
Yeah.
basically really outperformed the S&P 500. So again, recency bias is a dangerous thing for traders, for investors in general that think, what is the current regime cannot possibly change. Now, as a trader, it will change gradually and you should be able to pick up on it. But like right now, I'm not actually advocating like, oh, you just go long down. Like right now, I like to trade what's working, but it's
Mhm.
something to keep an open mind on that it can change at some point.
Yeah, and I mean, even recently is the the 2021 into 2022. 2022 felt like there's really nowhere to hide, and the drawdown on the S&P was nearly 30%, but the drawdown on the Dow was a fraction of that. So that's also where you see the
I think
outperformance
it
is
was
just if you want
15
tighter
or
drawdowns,
something. Yeah.
yeah, you want tighter drawdowns, you get a 12 to 50% drawdown on the Dow versus a 28 to 30% drawdown. The Nasdaq was 35, 38%. So, tighter
Mhm.
volatility and still matching performance on the upside, that's a pretty good index, if you ask me. And granted, it's only 30 companies, but price weighted makes it very different than market cap weighted.
Yep.
So
Yep.
I
Very
want to,
interesting stuff.
can I ask you a question? Let me ask you a question.
Yeah.
I am still, I did this morning in my trading room. I'm still completely not sold on anything with the dollar. I think the dollar is still a lack of direction. I think the dollar index is tough to read. I looked at all my currencies this morning, and let me bring up one of my workspaces here. See if I had this up. Yep. So let me bring up one of my workspaces. And let's go dollar crosses really quickly. This is just an easy at a glance system to use. And we're right on the verge of, okay, so I held through some basket stuff like pre FOMC, post FOMC, got my basket back to break even. But I look at this Aussie dollar, it's like, okay, it's close to a potential confirmation to sell, right? But what makes this easy is if we breach these lows and then I have a sell confirmation, I would just wait for a pullback and then a sell again, put in a stop loss, we go green to red. Like really easy visuals on this one. Euro dollar, same type of thing. Like not quite giving me the signal that I want. It looks like if I was going to sell it, I should have already been short. But with a pair like this, it's really efficient. All I need to see is it go green to red. If we go green to red and the dollar prevails, then I put a stop loss above. I go after some reward to risk that's favorable. Pound dollar has been an absolute dumpster fire, if you ask me. This has been so confusing, so choppy. We had a false breakout over here around 25.50. We had a false breakout all the way up to the highs at 2,900, and here we are back at
Mhm.
26 again. So I just I want to say that the dollar index is going to have a break. We're in that conditions right now. We're like pre-summer push in April, May that we're going to have some trends. But man, I can't believe how choppy and how indecisive the dollar is actually being. The one that is possibly the best setup is New Zealand dollar, and that's because the Kiwi's been weak enough that I'm just looking for a trade like this. We have
Mm.
support over here. If it pulls back to the ribbons and sells off, tight stop loss, go after some pushing. And the dollar index, I just want to see if it goes somewhere. But any thoughts on your direction on the dollar, Nick?
Yeah, I'm with you in terms of what I've been saying on the dollar index. On my side, it's just been very range bound, very choppy. But it's
Yep.
also the story is just not like it's not as clear cut as it was for me in like 2022. In 2022, it was like the Fed is just they have the stronger economy. They want to raise rates. Everybody else
Yep.
does too, but the Fed's just going to win that race. And the dollar was a beautiful trade that year. There was just this clear
Mhm.
story. Now there's like all this, who's going to cut first, and I feel like being long the dollar right now just because the other ones look more ready to cut sooner, which is the story, right? Because right now, what's kind of confusing to a lot of traders is that the dollar index is trending up, but yields are going down. They
Right.
usually move in the same direction, but the reason is simply because the euro and the pound are underperforming. The other, and when you're looking at DXY, right, it's comparing it to those other currencies. Those ones are underperforming it, so the dollar looks relatively attractive. I don't love that story for dollar bullishness. I like to be long the dollar when there's a risk off move, when the Fed is hawkish. I like that story better than, oh, well, the other central bank. I weigh most of my decision making based on the US because the US is, the dominant player at the table. So if I'm basing all my decisions on the ECB and the Bank of England being willing to cut sooner, I don't like that trade as much. So I've actually, instead of trading currencies, we've talked about it, Chris, but I still think the Fed looks dovish overall, but I want to kind of avoid over comparing to other currencies right now. So I just went,
Hmm.
I took that trades that we talked about with TLT. I sold puts a month out. And so I'm just kind of collecting premium or willing to buy TLT shares at a strike price of 93. So I got $1.07 on that. So
Okay.
pretty close to price, but a month out, that does give you um, I could get filled and I wouldn't mind it. So I like this general area of support on the daily, weekly. So I'm kind of with you though. I don't have a strong like conviction on the dollar itself. I've just
Yeah,
opted to go for trading the bond market instead.
that's possibly not a bad play. And, considering you're using, using an option, you're just doing a cash secured put, right? Naked put.
Yep.
So if you get
Yep.
filled and assigned, fine. Which again, for the lack of volatility on an instrument like TLT, I think that's totally great. So your break even would be, what's your strike price, Nick? Is it 93?
93, and I sold
93.
for a
So
dollar and 7 cents.
your break evens, 92 and like 92, 93 or so. So if
Mhm.
I looked at 92 at this chart, 92 and change, um, I mean, even if so, let's say you own it. I'm just curious, like what an at the money, if you own TLT and you
Mhm.
went out for a monthly cycle. So when is your expiration? Is it coming up
It's
pretty soon, or is it in
April
April?
April 26th. So
April
I
26th.
sold
Okay.
it a couple days back. So I sold it, right around the lows of this week, which was nice. So I captured a little bit more premium than what's probably out there right now. But I can show
Okay.
you my position just really quick. So um, chart. Yeah, so I have one that's expiring today. This one is out of the money. So this is, I sold this a week ago. This one I just rolled it a little further out because the VIX is so low. I know it's not a great time to be selling options in general, but
Mhm.
I just like to play on TLT. So I sold this like a couple days back during this sell
Right.
off. 93 strike price, April 26th expiration day. I did 10 contracts and sold it for just over $1.
Nice. Okay. But what I was going to look at is, let's say that you get assigned and you're willing
Mhm.
to take. Are you willing to take the shares?
Yep, for sure. I
Okay.
wouldn't mind, having a little bit in the portfolio. And, it's kind of just a rate cut play. I think that, same thing as with gold. I'm very positioned for rate cuts. We also both like the Russell. So I'm very
Mhm.
positioned for rate cuts. If we don't get them, I also have a pretty large size of cash. And if we don't get them, again, that's where I think the indices pull back and I can play it that way as well. Just
Right.
looking to get long indices and especially the Dow, as we mentioned.
Yeah, I like it. I was gonna say, so if you get assigned April 26th and you take that
Mhm.
assignment and we just went out for another cycle like 30 days, I'm curious what roughly 30 days looks like from a, at the money. So if you get assigned, I mean, you could sell a call against your shares and still collect a dollar, let's say $1.10 to $1.50. So you go from a
Mhm.
92.90 break even down to a 91.40 break even, just like that over a 30-day cycle. You could lower your cost basis. You could easily work through TLT. I just
Yeah.
think 30, 60 days out, I mean, you could easily work through that where your break even could be. I mean, if I looked at this chart, I would say as long as we stay above 92, I'm quite bullish on this pattern. To me, this looks like we have a cup and handle in the works where it would be,
Mhm.
there's such a sharp decline right here to put in that bottom, that this is where the market decides that it's going higher. And so this
Yeah.
floor is safe, and we're looking for this like overall structure to break. So I mean, anything above 92 is great, and obviously anything that pushes and poises bullish is even better. So Nick, you might be talking me to some TLT exposure, man. I like it.
Yeah, I mean that's my thought process too. Is I think we might have bottomed on TLT, and if it doesn't,
Yeah.
I'll adapt and adjust. But um, yeah, I think again, like I said, my bet right now is that rate cuts are coming, and so is the
Yeah.
markets. I'm a little, but my exposure is more on the commodity side, which would do okay even if the economy slipped a little bit too. So we'll see how it plays out. But definitely interesting stuff. And while this week is kind of quiet, I've just taken it as like a chance to kind of look over everything. What is my game plan? Especially if we get hot inflation reads in April or jobs data comes
Mhm.
out differently than what people are expecting. So it should be interesting. But yeah, real quick, before I step out of the way and let Chris take over the show, I wanted to mention to everybody who is watching here live, Chris is coming on the show on a regular basis now. He's helping us out to make this really a community-based show for traders. He's got some of his own audience members here, of course, our audience here. I want to just ask for people who are watching on my end of things, make sure to go follow Chris on his own YouTube channel. His link, we just dropped that in the chat here for you. Again, help us out. We're doing this totally voluntarily. So make sure to subscribe to this channel and to Chris's. You can also find his Discord channel. Chris, thank you for coming on, taking over the show, and I'll leave it with you.
All right. Thanks, Nick.
See you, man.
All right. Take care. All right, everybody. So we're just going to run a little bit as I just finished up my flex trading this morning. I've got equities on demand at the top of the hour. I wanted to just kind of review everything. So I've got a little macro watch list here, just a quick at a glance. So we're showing, Bitcoin just hovering around that $70,000 level. I'll check these really quickly. So this is the Russell, this is the NASDAQ, the Dow. I've got oil as well. I should put gold. I'm going to put gold and silver in here too. Let me add those symbols in. So let me go into XAU. Nope. So I want to go GLD. So I'll add in some GLD and I'll add in some SLV. There we go. And I can also add gold futures. So that should be, where's my futures feed at? I'll find it here. Should just be GC. That's what it is. All right, GC should be in here. There's gold futures. And my silver futures should be SI. Perfect. All right, so there's my macro at a glance. For the most part, we're seeing green across the board. I'm looking at a couple of, one thing that's been pretty wild is just take a look at my option software here. Since we had, it looks like there's just gaps all over the place. But the reality is this market has just been pretty quiet. The last couple of weeks, it's been harder and harder to get up to all-time highs. Although we're out, swinging 20 some all-time highs in the SPY this year. But if you go into last week's trading on the Fed, this was FOMC right here. So that was FOMC. That was during the release of the pause. That was the 2 p.m. rate decision. That was also the press conference at 2:30, which the market apparently loved what it heard, and the market ripped up all day. This is about a $5 move, which is beyond the norm. And then we had a gap higher on Thursday, which really didn't do much other than just kind of cling to those levels. So we gapped higher, had a very quiet day Thursday, also had a very quiet day Friday, gapped lower, had a very quiet day Monday, gapped higher, had a very quiet day yesterday, except for that sell off into the end of the day. And then today, here we are, just kind of hovering out another tight range, like a couple dollars. It's like down $1 or so. So if I zoom in on the 5-minute chart, I think we opened up around 521 and change. So here's the 5-minute chart. We opened up around 521.78. We're down to about 520. I'm curious, like if we breach this low, that certainly means there's some declining going on broader market. But if all we do today is we gap higher, we fade a dollar and a half, and we just stay here for the day. I actually have a position that I pin the 521, and I'm looking to get some kind of zero DTE, and I want that theta decay happening very quickly. And if we stay around 520 to 521, I should be able to grab about 50 cents or so today, hopefully higher. I'm curious if it gets back into 521, what it's trading for. So anyway, that's what's going on. And I built out a strategy this morning. I'll show you what it is if you want to see it. And then if we've got any questions, oops, where'd my charts go? If we have any questions on any charts, let me know. You can type it in the chat. I'll try to field those questions. That's a Dow play that I have going. That's a SPY play that I have going out to next Friday. I got into this for about $7. It's down about $1.20. If I go into the SPY, let me look at another. Actually, this is probably easier on Thinkorswim, but I don't need to load up that platform right now. So I'm just going to switch this up. Let's do today's expiration is the 27th. And I went out also. Let me see if I can go out 30 days. What was my expiration on my Schwab account? Went out to the 26th. So April 26th, all the way out here. So we went out 30 days. And so I sold an at the money strangle at 521. So as soon as price opened today, I just got positioned for a 521 sell trade. So I sold the call, sold the put, and then I went out 30 days and I bought about a 20 delta call and a 20 delta put. So that's a 537 on the call side and a 507 on the put side right here. So call, put, and make sure I did that right. 521 call, 521 put, 537 call. Aha. There you go. Just got to check those legs. That looks better. Okay. So this is what I'm looking for today. That looks obviously horrendous, but the reality is I only paid $2 for my debit. So worst case scenarios, I'm just gonna get what I pay for. I don't see us having a huge move today, but I'll evaluate. I'm upside down about 15 20 cents right now. Um, I might end up just taking this trade off now that I'm watching a little bit tighter. So I'm going to float this down. Silver, yeah, we'll take a look at that, John or Gene. We'll take a look at silver. So I would say that if we break this level, I really don't want to be holding the position I'm in. I've noticed that the put volume sentiment is coming in a little bit stronger. 54% versus 24. It started out initially about 50% on the call side. Now it's been flipped. So I think I'm going to go ahead and just take a safe play and close out for a small, like 20-cent loss. Let me get out of this trade. So going to my account, order status. I've got it set for a 255 credit. I'm going to change that right now and just get out around a dollar. Let's see, $1.91, $1.92, $1.93. Just in case it doesn't feel like cooperating today, or hang in there. I'm just, as I'm talking out loud, it's like this was a pretty ugly sell-off yesterday. We gapped higher, but this is what can be tricky about selling the market, intraday, is if let's say that from this week to next week, the market starts here and ends here. Okay. And if you've seen this at all during like the correction in 2023, we had that like September to October correction. If you saw this for most of the year in 2022 or the end of 2021, there's a lot of volatility around this. So the market destination could be from point A to point B, making a sell trade, but intraday it can be very difficult because what will happen is you'll have the market start here, all right, and it starts here and then it closes right there. And then the next day it gaps lower and then it fills the gap. And then it stays right here for the rest of the day. And then next day it gaps higher and then it flushes down and then it stays here. Right? So I mean we have gaps and we have sideways, we have gaps, we have gap ups, and it's just difficult to say every single day I'm just going to sell. So that's where time is on your side. If you believe in a direction, give yourself enough time to let that trade do what it needs to do. Right. And so I position myself a lot for trades like that, where now that I'm seeing this come back a little bit, my trade's back to break even. I think I'm just trying to get out of break even. I don't know. It's hard to trust this stuff right now. It's Wednesday. We're right in the middle of the week. We only have one more trading day into tomorrow. PCE's on Friday. The markets are closed, but I'm just going to take the small loss right now. So $1.97. See if I can get out of here for like a 5-cent loss. See if I can get out of here for $1.97. Come on, $1.96, $1.95. Survey says $1.97. Come on, market. All right, bid price is 92. I got filled at $1.96. Okay, so I lost $7. It's fine. I don't know. I just the vibe I'm getting from today's market after yesterday's sell-off. I mean, if we stay sideways, I'll just watch it. I'll monitor it, but I'm just curious how this thing plays out. I needed price to basically stay around 521 for the entire day if I wanted to max out my profit potential. But if it ends up getting more pressure, to the downside, if we start to revisit that low from yesterday, my trade's going to be upside down 40, 50 cents, and I don't necessarily want to be in it. So I'll stand back for right now, and we'll call it good. So let's go into somebody's asking about silver, so we can go. Silver's SI futures, or silver is SI if you want to trade silver futures, or SLV if you want to spot trade and paper trade it. Silver, I've talked about this before in my Discord channel. Right here, if you go into I'll share this link if anybody's interested in joining my Discord. In my analysis section, I did post some charts. I've got Bitcoin right there. I've got silver right there. I have gold. I have the Russell. I have the Dow Jones. I have the NASDAQ, and I have the SPY. And this is the SPX. So silver is one of my kind of favorite technical setups right now. And the key level to me is we've got to break that resistance level. If we're going to see a big, strong directional move on silver, I think we have to get a break above this. Now that you notice that my chart alarms are set, this is silver futures. I've got an alert set around 2645. Just noting a breakout. We come back to range lows. This is where I have some credit spreads on here. Part of me thinks, I mean, in the silvers market, I'm wondering, now that I take a look at this, it's like, could I put a strangle on? And let me see. I don't know if I can collect a ton of profit, but silver is going to be a little expensive on the future side. So silver futures here, April 25th. I mean, that's my nearest expiration. That's not good. So I probably won't take this trade. But if I did an expected move, let's say that we've got to be, 26.50 to $22, 26.50 to $22. 26.50 is way up here. Okay. That is a 17 delta, and $22 is way down here. I mean, I'd probably have to do like a 10 delta to be safe, $23. So if I did a strangle, I mean, it pays well on futures. It just ties up a lot of buying power. It's going to tie up $11,000. Now I could do an iron condor, which would be different if I just did this as a spread, 26.50, and take the 5-point difference, and a 23 and a 22.95, take the 5-point difference. Now I reduce the buying power from 12 grand to $293. My reward to risk profile is not terrible, and I can collect about $55 of profit. My max risk is $195. Probability of profit 72%, but I don't want to get in the way of this potential breakout. Right? That's what I'm thinking of, is if this breaks higher. Okay. If this breaks higher, I do not want to stand in the way of that move, because from this level of a low to a high, all I'm measuring, this is pretty simple, right? If I just take a measured move right here, so that low to that high, there's a couple ways I can project this out. I measure that symmetry, and that would be my first destination for silver. If we're going silver futures and we're looking to get long and generate some income or trade this trend, that's my first measured move right there. So if I was going to put a destination on silver, I'm going up towards 35.61, and that is a wave 3. Okay. In addition to that, let's take this and let's break this down into this larger head and shoulders pattern right here. Left shoulder, head to neckline. We break this neckline, we're pushing there as well. So this is a really nice pattern that's supporting the bullish thesis. The only issue is the timing. Do we have to wait for it to break above 26? Yes. If it ranges back down here, I'm still interested in accumulating some more silver, or at least position myself for more bullishness down at those lows. But what's nice is this is at least where I expect this thing to go if we get a breakout above 26.50. Okay. Now that would be a wave 3 move. Wave 1, 2 is the pullback that we're already seeing. So this is wave 1. This is a pullback. Wave 2. Wave 3 would be right here. If we have a wave 4, then we're going to come back to possibly test this high. That'd be our wave 4 pullback, and then wave 5 is another projected move. I would just go to symmetry once again, take this measured move. Okay, and again, this is roughly my calculated move, but we get up towards all-time highs right there. Okay, so clean up the boxes. But does this make sense? That if I had wave 1, 2, 3, 4, and 4 gets retesting on the high, we project another symmetry move, and we're back up towards $48. If you go back to the highs in 2010, 2011, that's where we were. So that would be the story on silver, is that we get back to all-time highs. Gold is already at all-time highs, right? gold still looks good as well. The difference is, I think right now silver is posturing for a bullish trade. We just need to see that break above 26. Okay, if we go to gold, let's go gold futures right here, trading at 22.31 on the weekly time frame. We're pushing back up to all-time highs. On the daily, we're stalling at these highs with that big wick. So we have GD as the gold futures feed. You can go to XAU for gold, and there's a little bit more volatility with that big spike we had last week. I still like gold to the upside. The measured move that I've already been looking at, there's two ways that I measured this. You take this high to low range, okay, and the halfway point is right there. So you take this move, take 50% of it, and that's your halfway point, and then you take 100% of it, and there's your full point, right? So you have your halfway range, and then you have your full range right there. So profit target one for me on gold is 22.71. Profit target for me on gold for full profit take is 24.70. Is again, as a trader, it's technically mapped out. As a long-term investor, as a, gold can do no wrong and it's the best place to be, and sure, you can always keep gold in the portfolio because it's it's an inflation hedge. It's a anti-dollar play. It has a real store of value. There's a real utility to it. Sure. But I didn't hear a lot of chirping out of bulls for gold over the last 3 years when it went nowhere. Now all of a sudden it's exciting again, and everyone's talking about gold, talking about silver, all this stuff is noise. I mean, as a trader, there's good upside potential. I'm positioning for it. I think there's good profits to be had at 22.70 and 24.70. From there, yeah, I'll keep it on the balance sheet. Balance sheet. I'll keep it on the. I'm not a company that has gold. I'm not a gold miner, but I'll keep it on the portfolio in some duration. Probably, for the next 1, 2, 3 years, I'll have like maybe 2 to 5% allocated to gold. I'm doing the same thing in crypto where I have IBIT and BITO and a couple of those ETFs and ways to trade options around the spot price of Bitcoin, 2 to 3% exposure. 5% for my personal account's about 10%. I've been in Bitcoin since like 2016, 2017. And I'm a trader. I've taken profits off. I played with house money. I turn it into, I take profits on crypto. I go into instruments like the markets, and I trade a lot of options. So I'm just a trader. I don't think you can talk me into being a pure, maximalist in anything, because I think what goes up does come down and what goes down does come up. And the markets always have this interesting like rhythm and cadence that we have to navigate, you know? So Anton says gold's 3 times more precious. I mean, that's fine. You can be like Gollum and say it's my precious, but the reality is, I mean, there's a chance where gold versus silver, same thing that Nick and I looked at on the pairs trade for the SPY versus the DIA. There's a time where silver outperforms. There's a time when gold and silver catch up. I mean, look at right here. Silver could do no wrong. Silver could do no wrong early 2020 when we had our COVID crash. And then after that, silver completely outperformed, you know? So it's obviously way tighter at the moment, but I'm curious. Gold has been up off the lows. And if I zoom in here, there are correlations where when it gets a little bit overstretched, meaning like gold outperforms to a certain correlated degree, then it starts to get. I mean, even for this on the technical side, it's hard to get overbought, oversold conditions, but it still pops up. Overbought right there, oversold right here. The market does respond to that. So we actually see that technically when I see some of these common, this is a momentum oscillator with some relative strength. When that combination occurs, then I mean, think about positioning for one outperforming the other. So I don't see it right now. I mean, this is the last time we had a big imbalance between gold and silver, right? So I don't see it right now, which means I'm not necessarily trying to position for it. I just think both have good potential going into this year, especially if we start cutting rates as well. We start cutting rates. I think that also bodes well for utilities and a store of value with something like gold. But the nice thing is on gold, the move has kind of already started, right? When this breakout happened, nobody was talking about gold. When that move happened, it's like, oh, that must have been a low volatility, low volume, like holiday spike. What a fake out. The top is in. Well, it was, but it was also the market kind of telegraphing what it was about to do. And here we are talking at all-time highs, and here we are looking at like I think the halfway point's right there to get hit. I think this market's going to be in a bull flag. If we have any sideways movement, that's fine. I'm still going to be looking to get long, right? We're here, little sideways, but we find that halfway point and there's profit potential. I'm trading it through GLD and some gold futures. So it's not that difficult. GLD, I have a 190 call running right now, and we're sitting back up at these highs. So my 190 call, let me see if I can show this position. So if I go 190 on GLD right here, I have a 190 call. And against that, out to April 19th, I'm selling a 210. So I'm into this trade. I think I'm into this for like $6 or $7 debit. Let me verify that here. Oops. So let me go to GLD. $7.26. So if it, let's say that GLD rallies up to 210, 210 minus 190 is 20 bucks, right? If I'm into the trade for a debit of 726, I make 1274, and I just have one contract running right now, but I might end up staggering in another contract or two. I mean, that's 1200 bucks, and the idea is I don't necessarily want to get it called away at 210. If I go to my GLD chart, my measured move is 212. So if I could roll it up again and give myself a little bit more upside potential, get another, let's say $2.50 or even $3, if I can turn that 190 into a pure delta play, I'm curious what that is right now. If I go to trading GLD, I go out to April 19th. The 190 is trading for, I mean, it's an 89 debit. So every dollar that GLD goes up, I'm getting 90 cents of profit. That's pretty good. I'm collecting about 90% of that move. So if it goes up to 210, that would be a $20 move. I mean, my reality is, okay, it's a $20 move. I get about 90% of that. I'm going to be up $18 of profit, right? Minus what I paid for it. So I'll net like 11 or 12 bucks. So pretty good. But I'm still upside bullish and still looking to just position for it. Okay. Coco, Sebastian, have you looked at Coco? Have you looked at Coco? I don't even know what to do with this, man. I mean, Coco futures, if you looked at it, this is the lumber of 2024, I guess, right? I mean, this has been up I want to say 2 or 300%. Okay, I was way off. 147%. That's still for a futures feed though, that is crazy. For the chart itself, I mean, I don't know. And there's a lot of there's a lot of environmental things going on with cocoa. This is something where, yes, I mean, what goes up like this is likely going to come down, but the hardest part is picking a top, right? I mean, if you were guessing at a top, like sure you can get lucky over maybe a 1 or 2 week cycle, but there might be enough like supply and demand issues that this thing just has an aggressive pullback and then off we go to a new high. So if anything, I don't know. I think it's fun to watch. It's interesting to talk about, but this is the type of trade where there's not a lot of reality here. Something bigger is going on from the environment side, from supply and demand side, and price is going to be very volatile. And I don't want to step in the way of that. I don't think it's the type of trade where it's like, oh, it's super volatile. Let's sell premium. No, I want to watch it. The whole lumbers feed from 2020 and 2021 when lumbers futures went up the same thing like 200-300%. And what it ended up doing, it did this. It rallied up like 200-300% and it crashed back down. It came back up, came back down, and then the whole thing was repriced. So random length lumber is a totally different feed now. And it eventually did, like, supply and demand made sense and the technicals and efficiencies came back to the market. But if you were trying to short, I mean, it started to print overbought conditions here and here and here, and it's probably going to print them again up here. I'm not interested in calling the top. If anything, take this low, take this high. If we get like a 50% pullback and it wants to go up from there and retest, fine. Maybe I take that trade, right? Or if it has a retest and it goes higher, prints divergence, maybe I can do a bear call spread or something on the options feed and see if it has a normal correction. That's about it. It would be defined risk. It'd be options only. I'm not interested in trying to chase this thing, but it is pretty wild for sure. Yep, for sure. All right. Any other currencies? I did Gold and silver, the dollar index Nick and I talked about. I'm probably going to take a look at some TLT. I think that's a good looking plan for, maybe, I don't know. I might do the same thing. I mean, I don't necessarily want to do 10 contracts on TLT, but I could certainly get maybe 4 to 5 contracts in to get some exposure. I'm more interested in maybe longer term. I looked at, even if I did like I think a leap is going to be rough just because it's going to put me at a break even around current price, or higher, and I need to actively lower the cost basis. Um, that being said, though, I mean, I do think that getting some type of like 85 or $80 long call, if I get a break even that's less than 100, I could probably work that cost basis down over the next 8 to 10 months. It will be interesting to see. I mean, if the stock market's going to go and continue to melt up to all-time highs, we're probably not going to see a gangbuster move on TLT. That being said, though, I mean, getting a little bit of position in here, not a bad spot. Like I said, technically speaking, if this is a cup and handle and we hold that 92 low, then we might just range and be like this boring trade. But eventually, this thing's ready to break out, and maybe the bigger move in the bonds. And I'm just throwing this out there. Think about this. This price is going to be moving up when the 10-year, 20-year, when the yields are going down. The market's already anticipating that, yes, the yields will be going down a little bit, but probably the biggest shift in bonds is going to be the yields on the short term, right? I mean, we have an inverted yield curve, and so that is going to effectively go back to flat. And so if you go to like a 3 month, the 3 month yield has been one of the craziest charts because it won't move. We're like pinned right here at 5 1/3, 5.5%. Um, this needs to really start to break down for, I think, the bond market to start to reprice itself. If the 3 month breaks down, where we start to see this dipping, to 5% or sub 5%, I'm curious what that does on the 2 year versus the 10-year. So if you compare like the 3 month and the 10-year, you compare the 2 year and the 10-year, right? Like those are interesting correlations to watch. Anytime we've had an inverted yield curve on the 2 and the 10, probability is we have a recession. The 3 month and the 10-year, we have a recession. But if you want a better indicator of recession is a 1% increase in unemployment over a calendar year. So if you have a rolling 12-month period, anytime we see an increase of over 1%, so this is the number. If unemployment, when we see those monthly prints for non-farm payroll, if we see a 4.4% unemployment print, look out for recession. Look out for some problems ahead, right? I mean, we're seeing more with tech right now. We're seeing more with AI. Companies are cutting jobs. Companies are scaling back. Companies are going bottom line oriented. They're trying to get into this AI space and this AI race where they're firing people. They're downsizing, you know? And so if we start to tick up into that 4% level, that's what the Fed wants. They want higher unemployment. They want to contract. They want to be restrictive. But if we get up to 4.4, that's going to be a problem. Just throwing it out there. So that's the number I'm watching right now. This is a undefeated indicator when it comes to recession. Yes, this is a product of monetary policy. So the 3 month and the 10-year has always been a sign of a recession, but there's always a huge window. It can be 16 months, it could be 24 months, it could take as long as 30 months. And they say, like, see, we told you. That's a long window to wait for a recession, But when we see things ticking up in unemployment, it tends to grab hold a little bit faster. So just throwing it out there. Okay. All right. I'll let you go for today. Hope you're all having a great Wednesday. If you want to, come back and see us tomorrow, awesome. Please do that. Make sure you check in with Nick and the team on the Edge Finder. And if you want to join my Discord, just real quick on my Discord, I know I showed the analysis section, but I got a bunch of good stuff in here. So if you join my Discord, I've got a free chat for everybody. So jump into the community. I post a blog every Friday. Anytime I'm live on YouTube, it's right here. I dual stream this session, so it's on my channel as well as the A1 team and Trader Nick channel. And then I post on Twitter. Any analysis that I have, like I showed you, all the charts that I post and anything I like, the heat maps. I also have a bunch of education in here. So if you're interested, I run trading rooms. I do a Forex trading room, a stocks and options trading room. I have a bunch of courses with videos, full strategy guides, robots from start to finish. I've been trading for a long, long time. So it's all there. This is why I built my Discord, is because I wanted all my content that I've been doing for, 10 plus years. I want it all in one spot. So this is an easy way to get it. And then I do some private coaching on the weekends. If interested, whatever asset class you trade. And then I've, Nick and the team and affiliates out there save you some money. trader resources I always use. And then I post a top weekly pick every Monday. I filter the market. Sometimes it's Forex, sometimes it's an option trade, sometimes it's, Bitcoin, whatever. But it just depends on what I like, and there it is for you. So check it out if you're interested. Here's the channel. Here's the group chat. I'll send an invite if you'd like to join. And let me make sure this link doesn't expire. There's my link. Copy, and I'll throw this in here. And there you go. All right. So if you pop in, be nice to see everybody. Equities on Demand students, I will switch over in just a few minutes, and let's kick things off with a little discussion on some low key markets and a little straddle swap. We'll talk about that today at 11. All right. Thanks, everybody. Have a good day. Talk to you soon.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.